So here's the big question. What's next for Apple and other U.S. tech giants with major production in China? Well, Trump's new tariff policy has sent shockwaves through the stock market, and Apple is right in the middle of it. As of Saturday, all goods imported into the U.S. will now face a 10% baseline tariff. But here's where it gets really interesting. Certain countries have been hit with even higher rates, with China facing a staggering 54% tariff and Vietnam 46%. That's a huge deal for Apple, which relies heavily on manufacturing in these countries. The immediate impact? A 7% drop in Apple's stock price, which has left investors worried about what's next. Now, if we look back at 2019, Apple managed to secure some exemptions from Trump's tariffs. This time around, the company will be scrambling to strike a similar deal. Investment analysts at Citi estimate that if Apple doesn't get an exemption and decides not to pass the costs on to consumers, it could see a 9% hit to its total gross margin. That's a big blow for a company already navigating supply chain challenges and growing competition in the smartphone market. But what does this mean for everyday consumers? Well, higher tariffs typically mean higher prices. If Apple and other tech companies decide to absorb the extra costs, their profits take a hit. If they pass those costs on to consumers, we'll be paying more for iPhones, MacBooks, and other gadgets. This kind of inflation could extend beyond Apple, affecting a wide range of products coming from tariffed countries. Interestingly, this could also shift the global trade landscape. Countries like Vietnam and Malaysia have previously benefited from U.S.-China trade tensions, increasing their exports to the U.S. But now, with these new tariffs, they're also in the crosshairs, which means they might start looking to the U.K. or other markets to make up for lost sales. If you're in the U.K., this might mean access to cheaper goods, but it could also hurt domestic industries that can't compete with lower-priced imports. And what about long-term investments? People with pensions and stock market holdings are already feeling the turbulence. Market shocks like these can be unsettling, but financial experts remind us that investing is a long game. While short-term losses may sting, the best strategy is often to ride out the storm rather than making impulsive decisions. One unexpected side effect of all this is what some are calling a Brexit benefit. While the European Union is getting hit with a 20% tariff, the UK faces only 10%. This could give British businesses an edge when trading with the US. But on the flip side, it could also mean an influx of cheaper foreign goods into the UK, which might put pressure on local industries. At the end of the day, these tariffs are more than just political headlines. They're reshaping the global economy. Whether you're an Apple investor, a consumer, or just someone trying to figure out what's next for international trade, one thing is clear. The ripple effects of these tariffs will be felt for a long time to come. Stay subscribed for more videos.